If your paycheck feels smaller this year, you're not imagining it. Groceries cost more. Rent is higher. Mortgage rates have doubled. And even if you got a raise, it still feels tight. So what's really happening? Inflation quietly reduces your purchasing power. When prices rise 5%, your lifestyle costs 5% more. But most salaries don't rise at the same speed. That gap, that's where financial stress lives. And it's not just groceries, gas, insurance, utilities, eating out. Everything adds up.
High expenses, low savings.
It's like running on a treadmill that keeps speeding up while you're trying to catch your breath. Now add housing to the equation. Home prices surged in recent years. At the same time, mortgage rates jumped from around 3% to 6 or 7%.
50% of your income goes
that one
to
shift
needs,
alone can add
30%
hundreds,
to wants,
sometimes
and 20%
thousands, to a monthly payment. And
We
if you're
did
renting,
it.
landlords adjust prices to keep up with their own rising costs. Whether you rent or buy, housing is now taking a larger percentage of income than ever before. When expenses rise faster than income, most people don't suddenly earn more. They borrow. Credit cards, buy now pay later apps, personal loans. With average credit card interest rates above 20%, carrying a balance becomes expensive very quickly. Interest is simply the cost of using tomorrow's income today. And when rates are high, that cost compounds. But here's the shift happening in financially stable households.
Your spending
They're
habits
not
show high
panicking.
expenses and low savings.
They're adjusting,
This explains the financial
tracking
strain.
spending weekly, cutting high-interest debt first, building 3 to 6 months of emergency savings, maximizing employer retirement matches, investing consistently, even in small amounts. Because compound interest works both ways. It grows your investments, and it grows your debt. The difference is direction. You can't control inflation. You can't control mortgage rates. But you can control structure. You can control discipline. You can control how every dollar is assigned before it disappears. Financial stability isn't about being rich overnight. It's about reducing risk, increasing options, creating breathing room. Higher costs and higher rates are real, but preparation is stronger than panic. And the households that adapt are the ones that move forward.